Hi guys, how are you? Mine this one Titanium. Welcome back to evidence-based economics and investing. So let's talk about the Nasdaq because I made a couple videos with it, and what I've been saying throughout these videos is you don't want to stop out just because something crossed a line. It doesn't mean a whole hell of a lot. It means more when the structure falls apart. Okay. Now, before I continue, I need you to understand something. That in order for a market to thrust up, you need a bunch of shorts. And if you look at the volatility index, it's historically low. That means there's nobody out there that's shorting. Okay, so when 2 weeks ago on a Friday this occurred, this is not a bunch of people shorting. This is a bunch of people selling. All right. Now, if you had shorts that came into the market for whatever reason, then you can squeeze them higher, and that's what usually happens. But that was not the case 2 weeks ago. We just came out of the blue. Everybody started selling the last 2 hours of trading, 3 hours, whatever it was, and everything collapsed. Now, since then, it's been in a corrective move counter trend, which usually leads to another one down. Now, I know a lot of people stopped out when we first initiated the short, which was at around 57.67. Okay, and I still have the trade on, so nobody can accuse me that I don't have the trade on. Um, the the next thing that happened, it broke the trend line. Everybody stopped out, and it's like, okay, guys, don't stop out just because it crossed some fucking magic number. That doesn't mean a whole hell of a lot. And sure enough, it came down, came back up, came down, and then it continued higher. Now I'm going to change this to candlesticks because I know that's what you guys like to use, and I don't like them, but whatever. So this morning I got a bunch of emails, messages on Facebook. What are you going to do with the Nasdaq trade? It's going against us and whatever. Now, what I want you to remember, again, mechanics of trading. Most of the move occurred in after hours. All right, and when those moves occur at the top with not a whole hell of a lot of shorts in the market, and you see the market going up, they're not solid moves. They're weak hands. Those guys, the moment they see something go against them, they're going to puke it up. And that's exactly what happened. So let's go through this, okay? I'm going to go hour by hour. This started to go against you, right? It broke the trend line. Everybody's like, "Oh shit, it broke the trend line. Wow. Oh yeah, look at that. Oh, ooh, ah, this is really, really bad." And then boom. As soon as the market opened, it crashed. And that's exactly what I told them. Wait till the market opens. Then we'll know what's going on. Okay? And then it went even lower. I don't know if you can see it, but let me change it back to bars. Okay, so it came all the way down here. Now, for those guys who follow me on Facebook and they message me and I give trades and I walk them through it, I kept them in the trade. They wanted to stop out here. And I said, no, 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 no. You have to stay. Wait till the market opens. And they stayed in it and got rewarded for it. Now, I'm going to go down to a 15-minute. So we had the waterfall, and then I said, okay, expect for this to pause at some point. Now, I put this wiggly line before it even occurred. All right. And I said, wait for some kind of flag to form, and then if it breaks, then take the short again. That didn't happen. It just continued on down. Fine. Once it bottomed and it started to rise again, all right, then at that point, what's happening is it's the first wave up, right? So this is a 1. Okay. Now, at some point, it's going to reverse, and this is going to be the 2. And you don't know how low and how deep 2 is going to be. It might be all the way down here, maybe even break the low a little bit and then bounce. And then that would be a 1, 2, 3. Then you have a flag that would look like that. All right. On the flip side of the coin, you could have something like this, which is a 1, a 2, a 3, come up to like as much as what is that? 5808, and then you'll have a flag a counter move flag, and then you want to take a short again here, and then take it down. All right. These are just different strategies. Now I don't particularly do that kind of stuff. I do it sometimes, but I don't. I just hold the short, and as you can see, it was way against me. All right, I was down, I don't know, $3,000-4,000, but I didn't panic. I just kept the trade in. All right, why? Because again, when I zoom out to, let's say, a 4-hour, this to me looks like a corrective move, the whole thing. And when the structure remains in a corrective counter move, I'm gonna stick with it. Why? Because my experience tells me that I shouldn't panic and I shouldn't freak out. And then I'm looking for the down move here. Okay, so it's going to be a 1, 2, 3. It's not that difficult once you zoom out and you look at it and you say, okay, yeah, this is a counter move. Now, it could, let's just for argument's sake, do one of these jobs all the way up, break the top, and then reverse. That would be just as valid. All right, so that would be a 1, a 2, and a 3. And then we'll see what happens from there on. But here's the learning lesson from all of this. That, number one, where did we take the trade? We took the trade at the previous high. Okay? And that's number one. That's a good trade. Even though it went higher, we don't care about that. The fact that we took it where we should have, we didn't take it down here, right? Or here, where most people take trades. They don't take them up here. They're saying, oh, look, it's going up, it's going to continue going up. All right? That's the way they trade, backwards. But I do things backwards. Because the way most people do it is wrong. Oh, it's going up, I'm buying. No. That's not the way it works. Anyway, so the first thing you have to know is when to take the trade. And we did take the short here. All right? Came down, took some profits, came back up. Took the short again. Continued higher. Did we freak out because it crossed this line? No, of course not. Okay, did we freak out because it crossed this line? No, who gives a shit about the line? Forget about the line. What does the structure look like? Look at the structure. This is corrective. Alright? And then I said again this morning, wait till the market opens. If it would have done something like this, okay, probably I would have stopped out. Because then the next move is going to be up here. And there's no reason for me to stay in that trade. Okay, if it was to consolidate above the structure, the wedge, then okay, I'll get out. Because it just doesn't look right. And then I'll re-enter it somewhere up here, depending on how it behaves. But the hardest thing for me to teach people is not to freak out when it crosses a line. This is so unbelievably difficult to do. Because people just, it's just the way they think. It's just they read these shitty little books that they think they're going to read support and resistance and wicks and candlestick patterns and RSIs and MACDs and all this other fucking bullshit, which doesn't work. Okay, it doesn't work. And they ingrain that crap into your head, trading for dummies and whatever. They ingrain that crap in your head, and then you can't get rid of it. It's a habit. You can't help yourself. You can't. It's just, oh, I broke a line. Get out. Because they don't understand the way the market works, how to trade, what the structure looked like, what is the pattern, what are the mechanics of trading. Was this shorts or was this selling? Okay. How does the market move higher and thrust up moves? Well, shorts are covering. It's a short squeeze. That's the way it works. Another thing. Let me take it down to a 5-minute. Okay. Now I've told you this. I've shown to the guys that are subscribing on Patreon. I've showed this a million times. That when it starts consolidating really, really, really tight, the next move is going to be a thrust down. Boom. That's what it does. All day long. Go back and test it. You don't have to believe me. I'm not telling you anything that you cannot go out and prove to yourself. Okay? I don't this is why it's called evidence-based economics and investing, because is based on evidence. It's not based on what I think, okay, or feel, or what some fucking stupid book told me. I don't, if books worked, believe me, you would all be rich. Look at it. Look at this one. Look at that. Tight, 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 tight. Boom, off it went. Why? Because that's what it does. Right? Granted, this is a 5-minute, right? But what you want to do it on is on a daily or a weekly, right? And when you look at it, look at this. Look at this move. This whole move going up has been really tight. So what do you think is going to happen? This is a daily chart now. Tight, tight, tight. 1, 2, 3. Now I'm not. This is a little dramatic, but you get my point, right? The same thing repeats over and over and over and over and over again. Look at the move today. I mean, look at the structure. Just look at the structure. Let me take some of these lines out. Look at the structure. Does that look like a structure that is going to go higher? No, it doesn't. It just broke out of the line, right? The resistance, and came right back down. Just cracked right back down. If you would have panicked, then you would have chased it down, and guess what? You would have shorted down here. And then probably tomorrow it's going to make another wave up and then crack. And then what are you going to do? You're going to stop out again. So, anyway, enough of that. So, still short the NASDAQ. Still in the corrective move. Let's see what it does tomorrow. Okay, we're going to have another bullshit move up or not. So this is what I'm looking for today. Remember, all counts start from the first counter move, right? So this is a 1. This is a 2. I am looking for the next wave up, 3. And depending where it stops, it's going to tell us a lot. Is it going to look like this? Is it going to look like a F flag going down? We don't know that yet. Okay? So, I will probably add to the short if it does one of these jobs, and then watch it fall apart. Because clearly you can see the flagpole happened today. Flagpole, flag, another wave up, and then down. All right. So here, that's this is a little freebie for you guys. For those who don't follow me on Patreon, then this is what you're missing out. How to do bare knuckle charting is what I call it. Where you don't use RSIs and moving averages and all this nonsense that never works for anybody. All it does is confuse you, okay? And nothing I tell you, you can't go out and test for yourself. So, if it's wrong, come back, tell me it's wrong, and I'll be more than happy to stop doing it. But I think you're gonna find it very difficult to prove me wrong. That's it for now. I hope you learned something. Subscribe to Patreon, and you can get more of this. Take care. Bye-bye.